session, Simplifying Money Movement Across the Borders. I have some of the most experts in this area. Dawn from Cambridge, Anil from MoneyCorp, and Moran from eBury are some of the leading providers of the payment in the payment industry. Welcome, gentlemen, to today's panel discussion. John, Anil, there, everybody's here. Thank you. Excellent. Welcome. So let's get this session kicked off, right? We all know pandemic meant that everyone was at home, right? But it didn't mean that our bills were not to get paid. So our bills needed to get paid. Employees needed to get paid during this period. And all of you have played an exemplary role in ensuring that the employees get paid, especially in this scenario. So Don, my question first to you is, what are some of the challenges that a company like Cambridge faced during this period, this last 6 months?
Hey, Vivek, thanks. Yeah, I think, the overall, not just Cambridge, but, the payments industry took something in that many other organizations had to take, which was transitioning almost to 100% work from home environment. When you have an operations group that, they sit next to each other, you're solving problems, you leverage technology as much as possible, but in the payments industry, no payment left behind does have some manual intervention. And so trying to transition in that work from home environment and ensuring that you still have that same productivity in processing was very important. And then, transitioning just into a work from home environment, this explosion within the payments industry, it was a lot of new entrants and capitalization became very important. And, ensuring that the proper capital was there to support payments around the world, and having sufficient capital in the accounts to ensure that when you deliver payments on behalf of your clients and getting money into employees' hands was done in an efficient manner. And it really became a true test for the full ecosystem of correspondence and bank accounts that you have around the world on behalf of your clients to ensure that last mile is going to happen. We found in emerging markets that, we're already, struggling, as is with infrastructure. Mm-hmm. And then you put them into an emerging markets environment. There were some challenges in some of those markets where manual intervention was key and there wasn't someone in the office. So, right. There was a lot more hands-on, from a service and operations team to ensure payments were landing so that people were getting paid, because cash is always king during, these type of situations.
True. John, what about you? Anything to add?
Sure, I have to echo Don's response. I think he's absolutely right. I think having infrastructure to support the businesses that you engage in are so critical. But one of the key factors that we have found during this time is the ability to pivot quickly. And this happened and came upon us so quickly. We found that many of the markets just weren't prepared for the ability to change the dynamic of their business in response to ours. So it didn't really matter how quick we could pivot or we could respond. It was a lot of the partners and peers that we work with at getting that last mile met. And while we continue to evolve and invest in our businesses, many other markets, many other regulatory bodies have not. And that has been a big challenge across the board that we've seen, is the applicability of migrating to a more technological standard, a global standard, if you will, is probably more important now than ever before. But of course, we're dealing with local regulators and local infrastructure. So I don't believe we'll get there as quickly as we'd all like to. But certainly having the ability to continue to reinvest in your business is paramount in this environment.
Yeah, John, you raised some very important points. We don't still have many global standards, especially from a regulatory perspective. So, Anil, in your mind, do you have anything to add in terms of any obstacles, anything unique risks that you all faced over and above specifically in this period?
Yeah, thank you, Vivek. So I think to both of panelists here to echo their sentiments. I think probably your biggest change was probably your communication, right? Because you're no longer in a single environment. You're everybody spread out throughout the world. And we've went through something that we've never seen in our lifetimes before. So for us to move quickly and also to communicate that we've never had to do before, obviously was a challenge. And also, I think you've seen a shift in the economy. More outsourcing, more is more relevant, more freelancers need to get paid. So the ability to adjust to the changing economy, I think, was very key during this time. And also having the communication line, not only internally, but externally to your customers, because their cash flow requirements changed. As Don mentioned before, cash is king. So for some businesses that may have held up on for payroll purposes and all of a sudden, hey, can you make sure this is done appropriately? I think you had to make those adjustments rapidly during this time.
Right, right. And, we all are in the world of, Neeyamo is, and you all support companies like us in the global payroll scenario. Cross-border payments are getting more and more important. So, Anil, let me start this question with you. Why is it so important to have cross-border payment capabilities? Why do payroll providers need to have this capability?
Well, I think if you're in global payroll, in order to be competitive in your market, you need those capabilities because it goes hand in hand. I think in today's market, as we've seen more and more outsourcing occurring today and the utilization of technology, people around the world are becoming your global employees or your work staff. So the ability to have the capabilities to pay around the world is very much essential as part of being a global payroll provider. And also having the right technology and having the right information today is so critical. Having the right data points is critical. So I think be in the global payroll space, it comes hand in hand to have that global payment capability.
Don, do you have anything to add?
Yeah, no, I mean, I think Anil makes some very valid points there. The payroll provider becomes that central source of truth. And so there's this natural adjacent need that if you're going to be the trusted partner, how can you help support the organization get to that last mile of getting the employee paid? So having a cross-border payment capability, that you're not dependent on, banks that traditionally are driven around, the SWIFT network, and leveraging, payment capabilities that have developed ecosystems to be able to do, direct deposit essentially in countries around the world, like you do here in the US. So it takes a lot of the friction out. But from a servicing perspective for service resolution, you have a central repository to go to and really focus with them instead of having to call multiple organizations around the world because you have multiple counterparties, as a multinational. So, when I look at it is, technology drives that and the ability to validate up front, but, having kind of what we're seeing, this evolution of borders, cross-border payments and the friction around that becoming a little less challenging, based on the ecosystem does help, drive, that capability for a payroll provider to have a cross-border payment capability built into the solution itself and their servicing capabilities.
Absolutely. You both of you are spot on. John, did you want to add a different flavor to this in terms of?
Well, I don't know if I have a different flavor. I think I could add some chocolate chip to the vanilla ice cream here.
Right. Okay. That'll help.
But look, the fact is that the Federal Reserve Bank had come out with a report that said should expect another 25% increase by the end of 2021 to almost $40 trillion in cross-border payments. It's an exceptional amount of money that's flying all over the place. And being able to foresee the changes that are occurring and becoming that extension of our partners and our clients becomes extremely important. Now, owning those payment rails, understanding those payment rails, understanding the risks and the liquidity and the credit and counterparty risks in these markets becomes extremely important. And as a trusted resource for our customers and our partners, and again, that extension being so critical, we need to continue to evolve. And that evolution we're not built around revolution, right? We're built around evolution. And
Right.
so revolutionary things change and impact the evolution of our business. The fact of the matter is there's going to be a supply chain that's more global. There's going to be acquisitions that require payroll payments globally. There's going to be an enormous amount of investment globally. The world is not decoupling, it's coupling. We're coming closer together on a more relevant basis. And the fact of the matter is there's going to continue to be this need to move payments, pay payroll, and being that trusted partner with the important investment in the payment rails and owning those payment rails and understanding those payment rails and then having your ear to the rail are so critical.
Absolutely. So, gentlemen, let me pose a little different question. And John, let me start with you. You all are today servicing, I guess, virtually across the globe, right? Every country, in one way or the other, you all make payments reach there. John, in your mind, what are some of the tough currencies? What are the tough areas and what are the kind of challenges you all face, and how do you overcome those challenges?
Sure. I think this is a pretty standard along the industry. Making payments throughout the sub-Saharan continent and Latin America have proven to be the most difficult markets and seem to be that way with very little clarity in the future in terms of how we can mitigate some of those risks. However, again, as I pointed out earlier, owning the payment rails, understanding the payment rails, reducing the credit risk, understanding your counterparties with whom you work with, and understanding how you can rely on that infrastructure and then build upon it, make it more technologically advanced, put more investment into it, and ultimately work with those partners to prove that you have the tested and tried solution that they're looking for. But there's no doubt that making payments, particularly in an environment that's stressed as we're in today, requires you to make those investments. And those, we've seen some losses this year. We've seen a lot of investment. We've seen a tremendous amount of acquisitions, some really good acquisitions that have been made that just strengthen the business. And ultimately, we need to, we're going to find that that's going to come together even more closely. There's going to be further acquisitions, further consolidation in the business. And I believe that we will see a furthering of technology. Hopefully, our partners and the payment rails can keep up with the direction that our customers and our partners push us in, because that's the critical component for all of us is we can only push so hard, but our customers want to push even harder. So integrating ERP systems and human resource systems and having one-touch transactional activity flowing directly through and having straight-through processing becomes so critical.
Absolutely. And I think, especially here in the US, we've all started talking about daily pay and on-demand pay. And I don't even know, it's a tough sell within the US, but in days to come, people are going to start demanding it on the global scale as well. So Anil, in your mind, any sub-Sahara, LATAM, any other areas that you all see challenges?
Yeah, I think LATAM, you're going to have those challenges because of the infrastructure within the specific countries. But I think China, you continue to face challenges as well. And a lot of it has to do with it's the data that you're getting ultimately from the payee, right? And it's so critical getting the global payroll provider has the right partner and infrastructure to get the accurate data. And it's so critical today. And still, even though with technology, not getting the data up front, which is clean, still makes it difficult sometimes to get the payment that we should on time. So depending on, everybody may have their own opinion, but I think, China is a good example, still is a difficult place to pay people on time.
So Don, from your perspective, timeliness, right, is in my mind an equally a challenge besides getting paid. Any geographies stand out for you when it comes to timeliness and the impact that it has on? Because in most other places today we are expecting same day or even when it's ACH 2 to 3 days SEPA 2-day payments, but there are others where we see these delays. So where do you all see those delays coming in?
No, I mean, I think you're seeing, it's an interesting dynamic that we're seeing in the markets today. So you have in your more mature markets, like the US and the EU and the UK, you have almost instantaneous, payments, faster payments in the UK that you can fund within 2 hours. I mean, even in India, you have the IMTS, rail that it funds almost within an hour or two of release. And then you have, areas like LATAM, where when you deliver money cross-border, there's still a lot of manual intervention that someone, up until the pandemic had to physically go into a branch and sign off paperwork to have money credited into their account. And a lot of that is around capital controls and just making sure that these regulators understand the flow of money coming in and out of the country. So, I think John and Anil hit this, very accurate that, as an overall industry, there's always challenges with the lack of infrastructure in the sub-Saharan, in African countries, to deliver money. We're seeing a change in dynamic with, some of the wallet solutions there, but, again, it's more of a personal transfer than, more of a business to consumer type transfer. China, again, you see these challenges with, the capital controls and ensuring that, it's documented, correctly. You have the regulatory rules and understanding why someone's getting that money. So there's a lot of red tape that impact the timeliness of a payment landing. So when you get into markets where there's less regulatory controls on money coming over the border, there's more transparency, accuracy to how that money lands, and you have much more confidence in paying someone. Where you have markets like Brazil, where there's a lot more red tape, you lose a little bit more control of how that money lands into the account. The money will be sitting at the bank, but it's not funding into the account because they have to complete the red tape to get that money into their account. And so that's where you start to see, as John alluded to, the revolution aspect is you're seeing people getting tired of that red tape and trying to find ways to expedite that without circumventing, what's required. And that's where we'll start to see in some of these markets where capital is very important to grow and support, local employee bases, where we start to see the evolution in payment capabilities to be able to leverage those, evolving payment rails to support both, B2B as well as our business to business, as well as, business to, consumer type payments that we would classify as, even employee payroll type payments.
So which leads me to my next, and I guess the most important question for most of the audience is, let's start with you, John, and then we'll go around. What are the new things that you all are expecting? Crypto? What's going to be the next future? What do you see coming up in 2021, for example?
I don't think, my personal opinion is crypto. I think digital currency and the mobile wallets certainly have a place in our ecosystem. And of course, again, using that whole revolutionary and evolutionary philosophy, we would not have payment ecosystems today if it weren't for the push of cryptocurrency. And so the idea behind this is that, again, that's cryptocurrency to me is a revolutionary speculative product that, of course, foreign exchange world lives in anyway. But the fact of the matter is, I don't believe crypto is the answer to our problems. I think it's just too difficult at this point. Maybe in 3 to 5 years from now, we may see a different structure, but the lack of regulatory oversight of it, and that's the way it was built, was to not have that regulatory oversight by the federal agencies to keep it more ecosystem relevant and within its own arena, sort of like the gladiators, I kind of look at it as, is that the ecosystem, though, that's been developed can certainly enhance the ability to move payments within a very short period of time, even in the most challenging markets, as Don pointed out, where all the red tape is, like Brazil and like China. So that could solve a lot of the problems by having ledger type of technology in place to support and really evolve the AML aspect of it so much more quickly, because that's where the holdup is in many cases. You can make a payment in an hour in some cases, but doing the due diligence on the payment becomes more of a challenge. So if we can lop off some of the concerns with ecosystems and move towards it, I think we could better position ourselves to move payments certainly more quickly. And then the technology, I think, from a faster payments perspective in the more mature markets is certainly there and coming very quickly. The importance of moving, people understand that people need to get paid on the 15th of the month, on the 30th of the month. It's important to the economy that these people are paid on time. And so these mature markets are developing these platforms to allow payments to be made on a timely basis.
Right. Even in a country like US, we don't have, other than using a wire, you still can't pay a person in 1 hour, which is possible, let's say, in a place like India or New Zealand or Australia, right? So I think this is relative.
Yeah, it seems a little unusual that that here in the US we can't do that. But I think the Federal Reserve Bank has taken a very strong initiative to move in that direction with the faster payment initiative. When it gets launched, we'll see. I think COVID has kind of set us back a bit from helping to make those decisions and put that infrastructure in place.
So Don, what's your view on crypto? Will that become the major bus for sending money to these hard to reach places, the payment provider there that accepts the crypto and converts to local currency, leveraging the exchange rate?
Crypto is never going to be the forefront until regulators and compliance can wrap their heads around it. The ecosystems are very much driven around what is accepted from an anti-money laundering perspective, and right now you just don't have a wide acceptance of that, and so based on that, the adoption will continue to be curtailed until that there's comfortability around that and how you can create transparency and regulate it and compliance from every person that's involved in the process drives it. The underlying technology, as John kind of alluded to, which is you hear blockchain or the ledger technology, has pushed really the overall archaic world of bank transfers into the next phase, which is good because it creates transparency with it hasn't been there. So you have the Swift GPI, which is probably Greek to a lot of the people that are not in the banking world, but what it does is it creates anyone involved in a wire transfer, the movement of global money. There's full transparency of who's involved in it, if
Right.
there are any fees taken out. And so that was, the foundation of what blockchain was as a distributed ledger to push that. So now there's a little bit of a battle of, is that going to be the next, evolution for moving money around the world with Swift? Or is it going to be adoption of blockchain? From our organization's perspective, I think we have horses in both races, because we're continuing to see how that, evolves. But we do, it's interesting to see technology with, the likes of Venmo, where I can instantly pay someone, or Zelle, I can instantly pay someone, from a personal perspective here in the US. But as you said, same day ACH is the best thing that we've gotten, and that's still even capped off, on the amount that you can do there. So that, real-time payments is interesting, but, I've talked about this multiple times in other speaking engagements. Moving money as fast is important, but not as important as the reliability and transparency of how, who that money is coming from and how to apply that money. So when you get into B2B payments, it's not always about moving money fast. It's about how I can recognize where that money is applied to and take that information. So I think there's two things that come into, instant payments or fast payments, is making sure that there's accurate information or remittance that is tied to, that payment itself as we move into, real-time payments and just moving money around the world.
Wonderful. So Anil, I'll give you the last word. We are at the last bits of this session. Any views on the future and what do you see coming in?
I agree with the panelists here. I think there's still too many uncertainties with the crypto from a regulatory and compliance perspective. Again, you don't have universal governance and you're still your source of funds is your biggest question mark. So that still is going to be a red flag from a compliance perspective. So I think we're a ways out on crypto, but I think what you're going to see in terms of common themes, again, every sort of continent or geography has its unique features, but I think what you're going to see is probably more a push towards away from SWIFT and looking for more cost-effective means and more reliable means in terms of rails. Also, I think you're going to see a rise in what we call the unbankable space as the millennials are becoming more of the people that we need to pay today. They're looking for, typically getting paid on their mobile or getting paid on a card. So you're going to see more of a rise of saying, hey, I don't want to get paid in a bank account. What else can you do? So I think there's a combination of various ways to look at it, but a lot of it is driven by geography. And I think there's still going to be a strong push away from SWIFT. I know SWIFT is there, but I think people looking at other modality and other rails to pay into bank accounts or non-bank accounts.
Yeah, I agree with you all. So, gentlemen, I'd really like to take this opportunity. Thank you for spending your morning with us and with the rest of our audience. And we really appreciate you being part of the conference.
Thank you, Vivek. First class operation.
Right.
Yeah, thanks, Vivek.
Thank you. Bye-bye.
Bye.